Hey everybody, Courtney Smith here with our September 6th edition of Wall Street Winners, racking up the big bucks, loving every second of it. And of course I love this. I like to read it every week as kind of a bedtime story. All right, so we go make new all-time highs. Purple Predictor has really boomed over the last month or so and turned from being bearish to neutral, which really is bullish because the change in pressure from bearish to neutral is a big change in a bullish direction. So look at that. It's like a straight line going up. Sweet. Looks like my equity statement. Now, the Dow, however, did not make new highs. So once again, what we're seeing here is that the sectors that are economically sensitive are lagging behind the growth technology sectors that are in the NASDAQ. Oh, and speaking of the NASDAQ, there it is, booming forward, solid purple predictor, all looks bullish. Now, our seasonality still neutral here, but we're now have to start thinking about getting bullish. And if we break above the highs we made in June, I'll turn bullish seasonally. Normally, seasonality starts at the beginning of October, and in fact, September is the seasonally weakest month of the year. But I like to start early looking for it. So a break above the highs that we made in June, that'll turn our seasonality indicator bullish. Now, utilities remain on a buy signal, and that buy signal will theoretically end at the end of September, but we may carry it on into the end of October. We'll just see. So right now, here's my line to turn bearish, but if we break to new highs, I'll probably move it up to these lows up here. Now, if we break to new highs, that's very bullish for utilities, but there's a problem. Look at the little green line here. That's your momentum divergence. We made a higher high, just barely, on Thursday, higher than this high over here, but the RSI, not even close. And what that suggests is that we're going to sell off this week and just form a little rectangle formation and not break to new highs. Or if we do break to new highs, it'll be barely to new highs. All right, seasonality, like I say, we're using the purple line up here. Rally, then we get a little dip, then a rally up in October, then a little dip, and then a bigger rally. And then you can see we chop around. So generally speaking, our seasonal pattern here is bullish. All right, now here, asset allocation, which had been in a long sideways pattern here, barely broke out to new all-time highs. So once again, money is being sucked out of the bond market and into the stock market, therefore supporting it. Every bull market needs new cash. It can't use the old cash. That's illegal. But you can use new cash. And we're seeing the new cash come a lot from the bond market. At the same time, though, they took a little bit of risk off the table, not big enough to really think about yet. EFA. Global shares break to a new all-time high as well. So this is bullish for the U.S. stock market because if the whole world is in a bull market, the U.S. can't go into a bear market. Yield curve, I'm not going to repeat what I've said the last month. We're in a sideways pattern at this point. Bonds broke down on Friday. If you look closely, what we have here is a pennant formation. Upward slanting trend line, downward slanting trend line, declining volume, and it looks like we've broken to the downside. Now we're doing it very close to the apex of the pennant, so it's not as reliable, but at this point, technically, we have to assume it's going into a bear market, into the bond market. Now what is a bear market? That means higher interest rates. Let's take a look at our key indicators. First of all, up here, this is the CRB, higher. We see gold, higher. We see the blue line, that's 10-year treasuries in Germany, higher. The green line, that's 10-year treasury yields going a little bit higher, but look for it to accelerate to the upside. Look for bonds to move down, interest rates up. Now, interestingly enough, even though we're seeing higher interest rates, we're seeing the dollar collapse, particularly against the euro. That's actually not good for the stock market. Usually if the dollar is strong, that helps the stock market because then foreigners who buy the U.S. stock market, they make money on the stock market going up and on the currency going up. Over here, if dollar's down, then gold's got to be popping up. We're just a smidgen under these highs here. Just a smidgen. I'm a buyer if we break those highs. Gold key indicators all bullish. This one's barely bullish down here. This is the yen, but at least we've got them all going in the right direction right now. Crude oil seeing some strength, but really we're a long way from these highs. I think that what's happening is supply is going up. We have supply was up 290,000 barrels a day in August, and it's expected to be up about 400,000 by the end of September. So supply is going up, and demand is still going up, but demand is slowing. And so the increase in demand is slowing, and that's why we sold off and why I don't think we're going to break to new highs on this bull market. Bitcoin, we remain bullish. I'm long Ethereum. It's in a strong bull market, whereas Bitcoin is really very sluggish. But nonetheless, for you Wall Street wieners out there, we are definitely long Bitcoin. All right. Thanks, freebies. Really love having you here. You know we give big hugs and kisses to you every week. And of course, if you want to learn how we come up with all these great trades, go to sss2021.com and check out our Stock Success School.